Did you know the average American has less than $1,000 in their savings account? Well, in this video, we want to teach you how to start saving the right way so you can stop saving the wrong way.
Now, what we're going to cover is we're going to cover 3 points that maybe you can identify with and how you can improve your savings, because the average American is having some issues when it comes to this. And the first point being is you don't have to. The reason why this is the case is because it's so easy for us to get financing from the banks or through our credit cards. Now, when we get financing from these people or these institutions, we end up paying them monthly payments every single month. So what happens is when we get paid, we end up paying them first before paying even ourselves.
And we can totally relate to this because, like Darius said, we don't save because we don't have to. Just let that resonate for a moment. I mean, we really don't take time to pay ourselves first because it's really easy to swipe our credit card to bail us out of whatever financial hardship that we're going through, or borrow from our 401k or get money from elsewhere. How many times have some of you done that on this video? So what we want to do is make sure that we address these points and that you really understand what's going on, because using your credit card, borrowing from your retirement account, borrowing from wherever is really not productive in the overall grand scheme of your financial plan. And we need to make sure that right now, today, you start figuring out ways to put money aside so that you have the savings you need.
Right, because I just want to say this again. It is so easy to get money from somebody else.
It is. It's
right?
Very easy.
Because you just mentioned a whole list of things, a whole list of places that we can get money from when we don't necessarily have it.
Yep.
So when that happens, there's no need for an emergency fund. Our emergency fund sits in our 401k. Our emergency fund sits in our credit cards. And we end up paying these institutions interest every single month that can be put into our savings account for us and for our families.
Yeah, and it's really about the immediate gratification, right? Because sometimes we have access to these things and we need the funds immediately because we didn't plan for it. Now, when we need these funds immediately, we don't care about the interest. We don't care about any fees that we're subjected to. We're like, take the taxes. It's 30%. It's fine. We'll be all right. But 30% you just washed down the drain and gave away for free because you didn't put a plan in place.
Yep, that's 30% that could have been sitting in your savings account. Ooh, and that brings up our second point is, like, when we go shopping, when we go and we see these 30% discounts on the entire store or 40% off your favorite pair of shoes, we think this is savings. This is not savings, ladies and gentlemen.
This is a juicy topic.
Yeah, because we recently went to an outlet store and we spent $80 and we got a discount of 40%. And actually, I have the receipt right here. Our receipt actually says that we got a savings of $32.40. Now, this $32, did you see that in our bank account?
No.
So does it count as savings?
No.
No, if it's not sitting inside of your bank account, it does not count as savings. So what happens is a lot of times we go to these stores and we think we're getting this amazing deal because we get a discount of 45%. But who actually wins on these deals?
Oh, I'm so glad you said that. The retailers, they do all day long. Because what happens as consumers, we fall prey to the advertisements, right? Because we're like, oh, 40%, let's go to Best Buy and get a new cell phone or a camera or whatever the case may be because of the savings that we're getting. But let's take a moment. Remember, we don't want to be a player in the game. We want to control the money game. So if you're a retailer, how much does it cost you to create these products and services? Pennies. They get all of their materials from different countries, sourced all around the world, export them back, and then they sell it to you for a huge markup when it only costs them a few bucks to make. But then they tell you, oh, it's 40% off. They're still getting killer margins. They're still making their money, and you think that you won.
Right. And the same thing is, man, if you knew how much furniture actually costs and the amount of money that we spent for it, you would lose your mind because it's crazy, the markups on every single thing that we purchase. And what I want to really stress is this is not savings.
No.
The only savings that exists is savings that sit inside your bank account.
Like Darius said. So wrapping up our shopping trip, the shirt that he bought cost $80. Due to the discounts, the shirt was about 50 bucks. But we still spent $50.
We did not save $32.40.
One more time. We spent $50.
And we did not save $32.40. That did not get put back into my bank account.
Yeah, so this is not savings.
Not at all. Not even close. Now, the next point that we want to make is you have to have a goal. The biggest reason why a lot of Americans are having issues with savings is because they don't have a goal for savings.
Exactly.
You can't hit something that you hadn't planned to work for. You can't hit something. Yeah, you can't hit a moving target. You can't hit a target that doesn't exist. You have to create the target in the first place.
Whew. Man, you can't hit a target that doesn't exist. Yes, because Darius and I were just talking today that a plan without a goal is just a wish. So if you do all this talk about what you're going to save or what you're going to do with your money and don't execute, it's never going to happen. So you really need to make sure that you understand your finances and how much you can consistently afford to pay yourself every single month. I don't care what the amount is, you better make sure that you are consistently paying yourself that amount every single month like clockwork. Because as we talk on this channel all the time, the worker is worthy of the wage, and you are the worker. You're the one who's going out spending all this time working away from your friends, away from your family. Make sure that you get paid.
Now, the steps to get to this point is, of course, listing out how much you get paid on a weekly basis or a monthly basis, and then compare that to the expenses that you have to pay on a monthly basis. And what you want to do is set a savings goal, whether it be 20%, 15%, 10%, or a set amount. Set a goal for yourself according to your income and your expenses. How much should you be saving on a monthly basis? And then work your way backwards to the goal that you want to set for yourself. So if you have this big, hairy, audacious goal of saving thousands and thousands of dollars every single month, cool, then do that. Just, you have to have a plan, you have to have a goal, and then you have to execute on it.
Yes. Now, just to clarify, what I want to make sure that you all did not hear from what Darius said is you're not going to save what's left after spending. Okay? What he's talking about is you're just identifying what your expenses are and how much you can afford to pay yourself. So that's something that I just want to make sure that we clarify, because sometimes when it comes to savings, we save what's left after we spend, when you need to pay yourself first before you do any spending.
Yeah, now if we loop this whole thing back around to what we mentioned earlier, we said that it's so easy for us to get financing from financial institutions, so we end up paying them before we start paying ourselves. What we have to do is create the sense of urgency to start paying ourselves first instead of saving ourselves for the last or the back of the budget.
Exactly. And like Darius said, if we're bringing this all home, why are we stressing saving so much? Is because you are supposed to become your own source of financing, or like we say on this channel, own your own lifestyle. Swag link is in the description below. So what we mean by this is really understanding, okay, if I'm going to pay the financial institutions X amount of dollars of interest on an annual basis, I should redirect all of that money into my own opportunity to create my own banking system. So what we talk about on this channel is all about the infinite banking concept, which is about turning the tables in your favor and becoming that source of financing for yourself.
Right, but before we get into the whole infinite banking concept, leave us a comment below on your own lifestyle if you understand what we're trying to say when it comes to savings. Savings is what's reflected in your bank account.
That's right? Hashtag own your own lifestyle if you're picking up what we're putting down. All right, so picking up on infinite banking, instead of going to the financial institutions and getting the financing you need, now you can reach into your own banking system and get the financing that you need from yourself and pay yourself the exact same way you would another financial institution. And all this is about doing is taking your savings and putting it into a whole life insurance policy.
Now, the reason why we like this concept so much is because all that interest that we would pay to financial institutions to finance the things that we want in our life, or the convenience of getting money direct deposited into our checking account, is so that we can redirect those interest payments back to ourselves. Because the average person spends about 33% of their income just on interest, not taking into consideration housing, food, and transportation, which is another 50%. We're just talking about interest payments that go out of our household into the banks or someone else's pockets.
Hence why you're not saving, because 33% of your income is going to the banks.
Now, we're just saying average. For you, it could be more, it could be less. The reason why we're mentioning this is because interest is a huge opportunity for us to start redirecting funds back to ourselves so that we can have more money to do the things that we want to do in our lifestyle.
Oh my gosh, could you imagine saving and then getting all the interest back that you're paying the institutions? Talk about wealth and talk about legacy building, because we just really don't understand how much money we're spending on a monthly basis that we're never going to see again. So if you're interested in taking control of your finances and becoming your own source of financing, then click on the link below to check out our masterclass so you can learn more about the infinite banking concept.
If you like this video, make sure you like, share, and subscribe, and check out our next video on the secrets to not being broke.
Don't forget to own your own lifestyle,
or someone else will.